Hello, everyone. Welcome to our channel again. Welcome to our time to learn and to share with you guys. It's always a pleasure being here. Today, we have Ryan with us, a senior veteran in the mortgage financing business. You will a lot to learn from him, a lot of wisdom, knowledge that he's going to share with us. And we have Miss Ikemka, always willing to share with us as well. So I'll let you go ahead and introduce Ryan because I know you guys have spent a long time together, so you are super familiar with each other. So yeah.
Yes, yes. Thank you so much. I really appreciate it. It's nice to be on the channel again, everyone. Thanks a lot for joining us. And today we have Ryan Young. I have known Ryan, believe it or not, since 2007. I think Ryan did my very, very, very first real estate deal or transaction.
Oh wow. I didn't know
I
that.
actually, that's true. Yeah.
Yeah.
Yeah, because I was a newbie then. I was a
Right.
newbie then. So I think my very first transaction was with Ryan in
Interesting.
2007 for one of my clients. So Ryan is currently with Summit Mortgage, and he has been with Summit Mortgage since 2007. So Ryan, when I knew you, you were with DHI. You were doing new construction because this
Yeah.
particular client was a new construction buyer, right?
Mm-hmm.
So you were with DHI, and I think we did the loan through
Mm-hmm.
DHI at that time because it was a new construction. Then after that transaction, you moved to Summit Mortgage. But your journey started in 2003.
Right.
Journey started
Right.
in 2003, and you were with Equity One.
Right. Right.
You were with Equity One 2003, then up till 2000, and was it five or six?
So I worked at Equity One, 03, 04, 05, left
Mm,
at the beginning of 06,
oh
and I went
06.
to
Right.
DR Horton or
DR Horton.
DHI. Yeah.
Okay, okay, okay. So you only stayed with DR Horton for about a year and then moved to
I
Summit.
was at DR Horton for a couple of years, and then yeah, that was kind of just the beginning of the, I guess, the financial crisis or
Right,
the downturn in housing. And so yeah, business really plummeted for the builder at that time.
right, 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 right.
So I went. I actually knew a friend of mine from college that owned Summit Mortgage, and so I had been chatting with him a little bit, and left DHI. I think November of '07,
Mm-hmm,
and
mm-hmm.
then just yeah, literally moved to an office down the street about a quarter mile. Um,
Okay, okay. One question comes to
mhm.
mind, really.
Yeah.
So you've been with, it's very hard. They say change is good. So you've been with Summit for 18 years, right?
Right.
You have
Right.
not left Summit for 18 years. So why? I mean, do you love it so much there? They have good programs. So tell us why you've been with this one company for 18 years, because it's very hard to find that, correct? It's very hard
Yeah,
to find
yeah.
that.
I mean,
Yeah.
I guess it is a bit unusual for our industry.
Hmm.
I mean, a number of different reasons. You know, relationship wise, I'm good friends with both of our owners. We have a lot of veteran people, so I've been friends and colleagues of a lot of the same people for all
Okay.
that time. And
Okay.
our industry is challenging, and I think the people that you have around you just, I mean, to help you troubleshoot loans and figure out solutions and just kind of just for in terms of friends and your support network, it's I value that a ton. And so I one is just the people. Two, I think from a business standpoint, I really like that people know where to find me. And I like that my name's associated with Summit for all these years. I think it's just, it's good for my brand. And, I certainly, if we didn't have the programs and the interest rates and the, support, I would look to go somewhere else. But yeah, it's, there's every company's going to have its positives and
Absolutely.
minuses, but at Summit, I know how to get things done. I know that our interest rates and our pricing are great. People know where to find me. I'm friends with so many people. It's just like the last thing I would want to do is make a move. I mean, there's a lot of movement in our business, but I just, I have a good thing going, so why recreate
Right,
the wheel?
right.
Yeah,
Yeah, so why rock the boat?
exactly, exactly. So, yeah,
Okay.
it's
Okay. So nice, 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 nice.
yeah,
They've been with Summit for the past 18 years and you like it there, right? So let's just yeah.
yeah, yeah, it's good, it's good.
Okay. Okay,
Great.
nice.
Hmm.
Nice, nice, nice. So we have a few questions we wanted to discuss with you. Like we had talked about. So we're just here to learn. I'm still learning, so you're the expert here. So I want to
Yeah.
try to learn from you as much as possible. And I just wanted to start off with one question here,
Hmm.
and that would be the biggest change. I mean, let's say since you've been in Summit, like
Hmm.
18 years, right?
Yeah.
I mean, what's the biggest change you've seen in the mortgage industry since you've been with Summit?
Gosh, I think it's tough to come up with one thing because it's
Mm,
so many things. I
okay.
certainly certainly the just the lending environment as a whole. I mean, back
Mm,
in '06, or '05, '06 when I was at DR Horton, and then starting at Summit in '07. That was kind of the tail end of the kind of the subprime mortgage um, boom and then bust. And back in those days, truly anybody could get a loan on just about any house if they had a 620 credit score. And that's
mm,
um, and so qualification was not terribly difficult. There was certainly some challenge in finding the right program and
right.
taking the time to find the best rates and best payment. But if somebody wanted to buy a house, and at that time it was a huge frenzy. Everybody was, lining up, particularly with new construction to get a contract accepted. But yeah, if somebody wanted to buy a house, then there was a way that we could get it done. And yeah, that was just the nature of our industry at that time. Um, and since that time, I mean, it in '09, 2010, 2011, it just, yeah, completely swung the other direction. And like I think it was healthy, but the biggest change is just evaluating people's ability to repay and understanding that
Mm,
that we're going to have to dig into income, assets, and
right.
credit to make sure that we can verify that it's going to work for them in terms of monthly payment. And
Right,
so,
right,
yeah,
right.
just really the underwriting process is completely different in the
Right.
sense that how detailed we get and making sure that we're meeting all the guidelines and requirements
So
for that
less
particular loan
risk,
product.
basically less risk
Yeah,
taken.
yeah, I guess that was a long-winded way of
Right,
saying, yeah,
right, right, right,
we're
right.
from a lending standpoint, there's less tolerance for risk, certainly. Yeah.
Right, 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 right. I mean, that brings me to a question. Just
Hmm.
thinking about it, it's like I know there's always audits, right? Even
Hmm.
in my field, I know we're audited, so are the underwriting, all these transactions that are, approved by underwriting, is there
Hmm.
any audit that goes on behind the scenes to make sure that things have
Hmm.
been done and rules have been followed?
Yeah, absolutely. I mean, there's annual audits from the state of Oregon, state of Washington,
Okay.
California, really anywhere that we do business, we're going to have an annual audit of
Nice.
some kind. So there's those things that we need to prepare for. There's
Okay.
there's the relationships that we have with our correspondent lenders that we sell loans to.
Mm,
There's whether or not we get audited by those companies, we need to make sure that we do everything absolutely
exactly.
perfectly, so that
Exactly. Mhm.
if a loan doesn't perform, ultimately that comes back to us if we haven't done our job correctly. So heaven forbid somebody defaults on a loan, whoever's the servicer on that loan, or if it's Fannie Mae, they can push that loan back to Summit Mortgage and sort of
Mm.
make us rebuy that loan or recoup some of their loss
Oh,
on that.
really? So you
Yeah.
guys might be made to rebuy a loan.
Yeah, I mean, there are situations where if we haven't done our
Due
job correctly on the
diligence.
front end in terms of underwriting, and it gets to our investor and they see an issue with it, then yeah, absolutely they can make
Wow.
us buy that loan back. So and that's just the nature of our industry. So it's super important that we're doing things correctly on our side, and I know that it's not always easy for clients to
Mm.
it's not always a super easy process to answer all of our questions and send us
Okay.
all the documentation we're asking for. But yeah, it's totally necessary for us
Yeah.
to offer the loan programs, to offer good interest rates, and us
Yeah.
for
Yeah.
us to stay in business.
Yeah. It's hard because buyers don't understand why underwriting is just, they feel like the underwriting is just stressing them out. Like,
Hmm.
ask for this. Like, what is going on? So me, in my job as the real estate person,
Hmm.
I have to kind of be the mediator sometimes. Like, listen, he's only doing his job. If you want to buy this house, just listen and just provide the documents. Like, well, he asked for this yesterday. Why didn't he? I'm like, just calm down, So I see that all the time. So I
Hmm.
mean, now I have just a little bit of more insight, knowing that sometimes you may have to rebuy your loan, right? If
Yeah, yeah. So exactly, we need to make sure that we're meeting all the guidelines, that we're paper trailing all the funds, that we're taking a thorough look at the income, that we're not missing anything on the credit report. Because ultimately, a loan needs to be sellable on the secondary market.
Hmm.
And so yeah, if we're not diligent about that side of the process, just as a company, we're gonna have a tough time. So yeah, I mean, I would love nothing more than to simplify the process at
Right.
times, and ask for less, but that's just not that's not the world we live in. So I try
Okay.
to let everyone know up front that it's gonna it can certainly be tedious. We're gonna ask you for a lot of things. When you provide something to us, there's a chance that whatever we're asking for could, or whatever you give us could raise further questions, and we may need to dig into that too. I mean, it's not that we don't um, trust somebody's ability to make their payment, or it's not like it's not as if we don't trust somebody's track record in terms of credit score. It's really just a matter of making sure that we're meeting the guidelines so we can
Right.
we can sell that loan and
Okay.
have the ability to kind of keep funding new
Um,
loans.
okay.
Yeah.
Okay. It's interesting you talk about trust. I'll let Tyre take the next question because
Hmm.
he was a first-time home buyer at that time, at some
Yeah.
point,
Hmm.
Yeah.
So
Yeah,
let him,
but
you
5 years
mentioned,
ago, 6 years ago now, right?
yeah,
So
yeah.
how time
And
flies,
he,
man.
he bought through
Yeah,
a builder, right?
Okay.
So he bought through a builder, used the
Yeah.
builder program,
yeah.
at that time. So go ahead with trust. So the question about trust
Yeah,
as a
yeah. Then
first-time
that
buyer.
was where my mind was at
E-
actually when you started talking because
Exactly.
firstly, you spoke about your time with your summit 18 years. So I wanted to know because you seem like, amazing response on those type of things. And it's important to me because that's
Right.
some of the things I wish to learn and to do more is build how do you build those networks, how you build loyalty, how you build relationship with people. And, for situations where, there's doubts in people, how you build the trust and how you manage those emotions, and come out with the positive end goals at the end of the day. So I think that'll be something I'll.
Yeah. Yeah. I mean, I think the way I try to approach it, I think, is take the time to make sure that I take the time to really understand somebody's situation, why they're buying, what's affordable for them, um, what their experience has been up to that point. I'm not trying to sell anything necessarily. I mean, at the end of the day, there's a sales component of my job, but that's not how I try to approach it. I'd rather just,
Be
like
honest.
I said, dig into their situation, try to educate them on what I would recommend, on educate them on the things that we're going to be looking at in their qualification, but not so much. uh, there's kind of two components to the process for a new buyer, and I would say that's, you know on one hand, we get a lot. There's the pre-approval, which is certainly important. A lot of people come to me obviously because they're looking for a pre-approval, but we also want to have a conversation about what's what's right for them and budget, right? So um, I like to start the conversation with getting an understanding of what they feel like is affordable to them versus what I can get them qualified for. Because oftentimes those are two very different things. And so, if I take the time to make sure that I'm educating them on and helping them understand what they should be looking at versus just the maximum amount that they can qualify for, I think that's a good place to start. So I'm not always telling people what they want to hear, but I think people appreciate that. To
The honesty, basically.
Yeah, yeah, exactly. And I think that's kind of where that's that's part of the reason why I've stayed in the same place, is because you know I've built those relationships. I've treated people the right way, and I think there's a reputation that I have and my company has, in doing those things. And so yeah, I guess just in terms of building trust, I'm not looking to just sell somebody a mortgage. I'm looking to try to help them make the best decision, in
Yeah.
terms of affordability and whether or not that means buying a house right now or 12 months from now or 2 or 3 years from now. I'm just trying to be a resource, I guess.
Nice. So it seemed like trust and being honest and being transparent with people is a big deal for you. You try to maintain that, and I think that's also what you mentioned why you stayed with this summit for so long, because you appreciate their system and you trust the leadership to a
Right.
reasonable extent, right? So yeah, that is really good. But in when dealing with people, what kind of misconceptions do you see, and how do you help navigate those situations and help come out transparent with ways that they can understand and be confident with, if that's what aligns with their goals?
Yeah, and in terms of misconceptions, there's a number of different things. I think I think a lot of people feel as though it's not worth talking to a mortgage company if I guess they're quick to get discouraged about the prospect of buying something. They sort of talk themselves out of it before even inquiring, and they feel as though they're going to wait and start looking at it when um, when I guess they oftentimes people wait and start looking at the mortgages after they've got really excited about a certain house, right? I think I think it's important to start before start diving into this stuff maybe before they're even ready to buy something. Start it really early so that they can be totally prepared when the time is right. So that's one thing. I just feel, I guess I think people oftentimes feel like it's not worth looking into a pre-approval, um, uh, because they don't they're not prepared to write an offer, or they're not they don't yet have the right house. So that's one. Certainly there's um, there can often be some misconceptions about the amount that you need to have saved up. Um, there's a lot of There's a lot of people that sort of overestimate the amount of down payment that they're gonna need to have saved. I think there's a lot of everybody has a circle of friends and family that are offering their opinions. And oftentimes people feel, I guess, intimidated to reach out to the mortgage company and kind of start that conversation. So, yeah, I don't know. I think a lot of people just, yeah, the intimidation and feeling like they don't yet have
Yeah.
their stuff together, when in fact, I think the best place to start is just reaching out to
Yeah.
somebody like myself.
Absolutely. I
Yeah.
remember when I moved to Oregon,
Mhm.
my dad actually told me just go talk to banks, just talk to real estate agents and see what's going on in the city. And I'm like, yo, I just left school. I'm not going to buy a house yet. I just
Right,
want to calm down, chill out, and and until we saw a house that we liked before we started even talking to people. So yeah, that I can relate to that. Like nobody wants to start talking to banks when they don't have anything. But you're
yeah,
saying that's the way to go about it, that's the best thing to actually do, to have
right,
the information, to have the knowledge, and not wait till you need it before you actually get the understanding of what's going on.
Right, right, right. I mean, honestly, right now it's even illegal for us as real estate agents. A new law came out, I want to say maybe 2024, August or so. Before you show a house, you have to sign something. They have to be pre-approved,
okay,
right? I can't just show you a house if I don't have an engagement letter with you. I am breaking the law,
hmm
real estate wise.
Yeah,
You
hmm
but
have
we
to.
we we had that. The law was there back
No,
then
no,
in
no, no.
2020.
Now is
It's
mandatory.
mandatory. I see.
Now it is. Now then, I can show you house. I don't have to sign anything, whatever, but now I have to sign something. And I'm not pursuing my own due diligence, because if I go show you a house and you're not pre-approved, I wasted my time. I
yeah,
don't have the
yeah,
time to waste, right? So gone are
yeah,
those days, gone are those days. So now it's just advisable. In fact, we put it in effect now more than
hmm
before.
yeah,
Get your pre-approval. So if you're not, and leading to the next question on creativity, right?
hmm
Because being creative, if someone wants to purchase a home, first-time home buyer, is there, can you be creative for a first-time home buyer or not? Or rules are set in place or they're standard?
yeah. I mean, I don't know that there's good question. I don't know that there's anything that's uh, I guess I like I don't know that creativity is any more applicable to a first time home buyer than it would be to any other person buying a house.
Mhm.
I think that I mean, there's certainly some creativity that can go into helping somebody be approved if their situation's unique, if their income is unique, if their down payment is coming from an unusual place. Um, Whether a first time home buyer or or a repeat buyer. Um, and there are a number of different ways that we can get things approved. Like, I mean, normally the the ideal place to start
Yes.
is, or I guess the most common loans that we look at are FHA, conventional
Mhm.
loans,
Right.
but there's also non-QM loans that are um, priced a little bit differently because they're a higher risk loan. If somebody doesn't qualify and for a traditional mortgage, if they need to qualify using their bank statements or just any sort of non-traditional income, then
Right.
then then it, those can be some good options. But yeah, I don't know. In terms of a first time buyer, um, there are more programs available to them. There are oftentimes some price breaks in terms of interest rates
Okay.
and loan fees, particularly depending if it on their income level. So if you're low to moderate income, you you
Okay.
you get some enhanced pricing just in terms of
Mm,
a conventional loan. So like a Fannie Mae, Freddie Mac type
right,
loan.
right, right.
And that can be super beneficial. It can make things a lot
Mm,
more affordable.
okay.
but ultimately, we're always going to start with, credit, income, and assets, and we're going to go
Mm.
from there.
So instead of creativity, you have
Mhm.
programs. So you look for which one suits each person the best, right?
Yeah, yeah. Just like I said, depending upon credit, income, and assets, and how all those components combine, that's
Mm-hmm.
typically going to point us in a particular direction. And now, everybody's situation is unique, and
Right.
there are a number of different ways that um, people generate income that may or may not be. Um, that may or may not be something that we can consider on a mortgage, a traditional mortgage loan.
Sure.
And so oftentimes we need to, you know, we're trying we're we're trying to figure out a way to help somebody qualify in such a way that their debt to income ratios work, or in such a way that you know they have, maybe we're having to get creative in terms. I don't know if creative is the right term for it, but like maybe we're having to do some work on their credit, right? Maybe we're having to, somebody comes in and they're having a hard time qualifying because their credit score is,
Mm-hmm.
mid 600s, which isn't that bad, but there are some price or rate adjustments at, the
Yeah.
lower the credit score. So
Mm-hmm.
sometimes creativity is just a matter of like taking a hard look at a credit report and figuring out how to get their scores up into the, set at the up to 720, 740, that sort of thing that's going to make the house more affordable. So, creativity oftentimes is just a matter of uh, figuring out, where the challenges are, be it credit, income, or down payment, and figuring out a solution for that.
Okay. Okay. So basically, see where the challenge is, work with that
Can
challenge to make it a positive.
Yeah.
I say something real quick?
Yeah.
You know, when people from the outside look at what people that are experts call, when outsiders call it creativity,
Mhm.
experts look at it and like, this is normal for me in my line of business, you know. So, for example, when I'm getting a part-time in mechanical engineering, someone be like, wow, that is so creative. I'm like, no, I just follow the mechanical engineering
Right.
principles, you
Yeah.
know. So, yeah, for
It's
us,
the
it
same
might
thing
be
he's saying.
creativity, but for you, you're just like,
Yeah,
it's
that
just a
makes sense.
Yeah.
program.
Yeah, it's just
Yeah.
exactly. It's more of just a process, and like it's just a path to solve a problem.
Yeah,
Yeah.
but for us, when we're looking at it from outside, we're like, whoa, Ryan is a genius. He just
Yeah.
pulled that off.
Thank
Yeah.
you.
Yeah.
Wow,
Yeah, that's kind of fun.
that
Yeah.
was high level creativity right there.
Right, right, right. Yeah. I mean, I'm not above taking credit for that when I get those calls.
Yeah,
Right, right.
modesty, I
Good.
like.
Okay, yeah. Good, good, good. Okay, Ty, do you want to go ahead? You have a question or should I go continue?
Yeah, you can continue. I have a
Okay.
question about refinance I can ask you.
Okay, refinancing later. Okay. So a lot of things going on in the current market, how do you or how do you as a mortgage broker, how do you keep up? I mean, there's just so much going on right now. Someone actually asked me today,
Hmm.
what should he do?
Hmm.
Should he proceed? Should he wait? I mean, there's just so much going on. He asked me at church,
Hmm.
what should he do? And I'm like, he says he'd rather wait.
Hmm.
I always said now is the best time to buy.
Hmm.
Like it's better now than, but I felt bad telling him to buy now.
Right.
You know what I felt bad because like it feels like I'm looking out for myself and not him.
Right.
Right. So, I mean, how do you keep up? So much is going on right now. Would you still advise someone to buy now? Or would you, tell them to wait?
I don't know that there's like I don't know that there's a definitive answer on that. I think if somebody um, is confident in what they qualify for, and is comfortable with how that payment's going to look, I then certainly I think buying now
Mhm.
is a great way to go. I think I mean, if unless you're looking to, just make a real short-term investment on something, you know, I a home purchase is it's a long-term investment. Whether or not the timing might be a little bit better 6 months from now or 12 months from now, or it's so difficult to predict. So, I think the assumption is, as long as this is going to be a relatively long-term investment for you, or a lifetime investment, be it, 5, 10, 15, 30 years, then now is a good time. If you're comfortable and confident in what you're doing. If you're trying to rush it because you feel like you have to buy right now, then I don't know that it's necessarily the right time. You know what I mean? So I think that it's difficult to make that decision until you have gone through the process of, talking to you or talking to me, and working through those numbers. But yeah, I don't know that there's like broadly speaking, I don't know if there's a right answer to that question. It's really just dependent upon everyone's situation. But I do, whether it's buy now or buy later, I do think the right time to start looking at it. I mean, if you think that the possibility might be coming up for you, I think the right time to start looking at it and start working through all the things that are pre-approval entails is as soon as I would say is closer to right now.
Okay. Okay.
Yeah.
Yeah. I mean, I think we're on the same page
Yeah.
there. But sometimes you just feel like you don't want them to think you're not looking out for them, right? Because they're convinced that they should wait. And here I am saying buy now is like, whose side are you on? You know? So,
Yeah.
but yeah, yeah,
Yes.
I'm very careful in saying sometimes I feel I have to be diplomatic in saying buy now, which I know is the best thing advised, but
Mhm.
how are they going to receive it? You
No,
know?
that's very true. I think that um, you and I both have probably done a good job in our careers of
Mhm.
not not pushing somebody to do something before they're
Right. They
comfortable,
don't feel
right?
comfortable in doing
And
exactly. Right, right,
yeah,
right,
and like I think the
right.
best thing I can do is just try to present people with the information that they need to just kind of work through that on their own. I'm not gonna. I never want to push somebody forward that's not quite ready. So I think it's generally speaking, looking historically, yeah, the right time to buy is probably now versus waiting. But at the
Right.
same time, like I don't want to push people through that process before they're ready. Meaning, like it can be a fairly daunting process to
Right,
to to,
right.
to buy a house. It's an
It is.
anxiety-inducing emotional process at times,
Right,
as we all kind of like figure out after we get through it. And so, um, yeah, I think I want to make sure somebody's ready to do it when when the time is right for them.
right, right,
So
right.
that's kind of how I view it.
Yeah. I mean, honestly, I think there just has to be a balance because they may be ready financially, but emotionally they're not ready. Like, right?
Yeah,
So
exactly,
everything has to
exactly.
be balanced. Emotionally, financially, they have to feel like they're making the decision to buy,
I
not that
totally
you're
agree.
pushing them to buy,
Yeah,
right?
I
So
totally agree.
our job is to kind of give information and let them make the decision,
Hmm.
because God forbid the housing market crashes next month. It'll be like, well, you told me to buy,
Yeah,
So yeah, they have
good
to
point.
feel confident in making, that decision. But yeah, Tayo, I'll go ahead and have you talk about your question.
Yeah, yeah. So what I really like that I spoke about when Ryan was talking about these also is the fact that it's long term. So at the
Mhm.
end of the day, it's gonna go through a whole process. And
Right.
one of the things I found out, and I realized that, after buying my home, that wait, this thing is so long term. So many things will change along the line, right? And some of the tools that get used a lot is refinancing. refinance couple of times over, like I did once. I moved from about 2.7 to like 2.5 or 3 to like 2.5% interest rate. So I was going to ask, people now say that refinancing is not super beneficial to the buyer, that the companies get a lot more from it because you are kind of restarting your loan again, in their
Yep.
opinion. So what is your take on something like that?
Yeah, so I certainly get that perspective. I, I, I think that so if, like for instance, if somebody's been purchased a home a couple of years ago and they've been slowly chipping it away at their principal, there's some hesitation to move forward because like why do I want to start over, right? Why do I want to lose that 2 years? And I certainly understand that. So oftentimes we'll look at 25 or 20-year loans. I mean, I think when we're so taking them out of like what used to be a 30-year loan, maybe they have 29, 28, 27 years remaining. Well, then maybe it makes more sense to look at a 25-year loan, or maybe it makes more sense to look at a 20-year or 15-year loan. I mean, I think that one of the things that I try to help people focus on is not only what are your monthly payment savings, but how much interest are you saving monthly? And so I guess what I'm saying is sometimes, a client can save a considerable amount on interest and then take a shorter term. Um, their payment might go up marginally, or may not go up at all, but they're taking that interest savings and applying it back towards the principal. And so there's no reason to feel like you're completely starting over. I mean, even if you got into a new 30-year loan, and you were saving, you were saving a couple $100 worth of interest, you could take that savings and put it back towards the principal and pay off the house more quickly. The real key, the key thing to be looking at is not necessarily how much am I lowering my monthly payment, but how much interest am I saving, both monthly and over the next 5, 10, 15 years.
Thanks for that.
Mm-hmm.
Yeah, that's quite helpful.
Does that make sense?
Yeah, absolutely.
Okay.
That makes all
Yeah,
sense.
yeah. Okay. So that makes sense. So, so refinancing is not a bad thing, but it has to make
Refinancing, yeah,
sense.
not at all a bad thing, and I think a lot of people um, get. I think oftentimes people hear something in the news or receive advice from friends or family that makes them hesitant to even look at it. They feel like they need to drop their rate by a predetermined amount. They feel like they need to save a certain amount of money to make it worth it. And while those things are all can certainly be true, there's so many other factors that go into it. If somebody has a large mortgage, like 750,000 to $1 million mortgage, and well, they're going to potentially save a lot of interest by dropping their rate, a half a point.
Right.
For example, if somebody has a $200,000 mortgage, dropping their rate a half point isn't going to be nearly as beneficial. And you're always weighing the benefit of interest savings versus the closing costs. So, so that's we're just always going to want to look at what the benefit is in terms of interest savings and monthly payment as well versus the closing costs. And a big component of that is their loan amount, and also what is their budget. It $200 a month can be completely in interest savings could be completely different from one client to the next in terms of what their goals are, and how their budget looks. And so it's always worth just evaluating how a refinance could look at some point, so that when when that window is available in terms of interest rate, you can be ready to jump on it, if that makes sense.
Okay.
So, I think, I guess my broad point is, I think a lot of people have some preconceived notions of when a refinance makes sense, and sort of apply that to everyone across the board, when in reality it's so different depending
Yeah.
upon
Right.
so many factors,
Right.
and just what somebody's goals are, what somebody's long-term plans are. I mean, like, if somebody's looking to sell their house in the next 2 or 3 years, then that conversation is completely different
Different.
versus somebody that's looking to stay there for 15, 20 years. And a lot of that also has to do with how much, how tight of a budget they're on. If somebody has a lot of disposable income, then maybe we can take them from a 30-year loan to a 15-year loan, and make that reasonably comfortable, and save them a lot of money. So,
Mm.
um, anyhow, that's,
Okay.
number of different things that we look
Okay,
at.
makes sense.
Yeah.
Makes sense. So our job is just to look at the whole picture. So when someone comes and says, let's refinance,
Hmm.
just pause and let's look at the whole picture. Refinancing may not be good for you right now,
Exactly.
Pros and
Exactly.
cons.
basically.
Yeah, you always want to be super mindful of what the closing costs are, because even if
Right,
you're rolling those costs
right,
into what I should say is, even if it's nothing out of pocket,
right.
um, there are typically going to be some closing costs that are going to essentially be most commonly added to your principal balance. And so,
Mm.
if you always
That
want to weigh
makes
that
sense.
cost
It has to
benefit.
make sense.
Exactly, exactly. And
The
I usually
numbers.
look for relatively low cost options on a refinance,
Right,
as
right.
a particularly in this rate environment. I think there's a pretty good chance that interest rates could be lower in the next 2 to 5 years. And if you're looking at refinancing now, um, if there's a good opportunity to do so, I don't think one should hesitate, but I also think that you should hedge yourself for the possibility of refinancing again in the future. Whether or not that day comes, it's difficult to predict, but a good way to hedge yourself in that direction is to keep your closing costs low. Um,
Right, right,
to avoid paying, $5,000 to $10,000 in closing costs that may be difficult to recoup over
right.
the next couple of years.
Right, right, right. I know some, like Taya mentioned, I mean, his interest rates is maybe 2.5 or 2.75.
Yeah.
I know a lot of people ask me, are interest rates ever going to be 2.5? Should I wait? I'm like, what?
Yeah.
Wait?
Yeah. Yeah. I
No.
don't think they're going
I
to
don't
be.
know if
I
we'll
mean,
ever see 2.5
yeah.
again.
Yeah.
I actually had someone that refinanced at 1.99.
No way.
1.99. They've
Yeah.
paid off their house now. Then they refinanced at 1.99. Yes.
What
Yeah.
At
year
that
was
time.
this?
During COVID, during this COVID season, you're right. Because COVID, you had 2.5, right?
Yeah.
So someone refinanced to 1.99. But was it ever gonna come that I don't I don't think so. I mean, what do we have to go through for that to come back? I would rather not, you
That's a
know.
great point. Yeah. That's a
I'd
great point.
rather
I
not.
would, yeah.
Yeah, yeah,
I
I'd
would,
rather not.
yeah.
So
I would
I
hate to
don't
see what's
think,
going on in the world,
yeah,
with
yeah,
the
yeah,
economy, if we ever get
yeah.
down to
If
2%.
it'll come down, I mean, I don't know, but what I tell people, if it's gonna come down, maybe five. Don't look for three. Don't look for four. Maybe
Oh, yeah.
5.5. But
Yeah.
don't say you're waiting till it comes down to 3 or 4 because
Sorry,
I'm not
what
sure.
what is it right now?
It's 6 point something.
Yeah. We're
We
depending
haven't.
upon a number of different factors,
Right.
we're and high fives, mid to mid sixes.
Mm-hmm.
Um, and so if you're in a loan that's at 7.5%, the last thing you should be doing is waiting around until it reaches
Exactly. To
five
see.
percent. If you can
Right,
get
right,
6% in the interim and do
right.
so at low cost,
Waiting for
Mm-hmm.
the
Mm-hmm.
1.99.
yeah, exactly. I mean, it sounds like a
Ridiculous.
great
One point
idea,
nine
and,
nine.
and until rates are until rates pop up and stay there for the next couple of years. Not that, we don't know what's going to happen. So if there's an opportunity, there's to improve upon your situation, even if you think someday it might be lower, you should just grab. I think that there's something to be said for grabbing what's available while it's there.
Right. And still on refinance for a little bit. You can refinance as many times on a house, right? I mean,
Right. Yeah. The
for
one
the,
just
So as long as
absolutely.
you keep in mind the closing cost and
yes, I
the
mean, it's up
payment
to
like
you, right? If you
points.
want to refinance
Exactly.
10 times on this particular house, it's up to you, right?
Yeah, there's just all the more reason to be mindful of the closing costs and make sure that
Hmm.
you're doing
Hmm.
something that's going to allow you to recoup those closing costs or
Right,
offset those closing costs in
right,
you a reasonable amount of time.
right,
Uh,
right.
yeah,
But
yeah,
get
and
in, buy a house now, because the way you're thinking rates are going to come down, it might just go up as well, right?
right, yeah. Like you and I talked about, I'm not gonna, I don't want to pressure anyone into doing it before they're ready, but if it's impossible to time the market perfectly, be it
True.
um,
Absolutely.
investing in stocks or investing in homes. And I think that if you just look over the course of history, um, markets generally move up. And if it's
Hmm.
whether today is the absolute optimal time to do it, it's more than likely better than it will be five years from now. So,
Right.
um,
Right.
yeah, I think I see more people getting caught up in the trappings of trying to be absolutely perfect with their timing,
Yes.
and it's just I don't know how you do that. I mean, yeah, there's people that time it up really really well that are fortunate to have things fall their direction from that standpoint. But there's also people that don't time it perfectly. Let's say in terms of interest rates, but
Mm.
the down the road they're able to grab a lower rate. I've been
Right.
refinancing clients over the last few months that purchased when rates were upper sevens, and now they're
Wow.
getting something close to six, something in the low sixes,
Mm.
and they I guess they've had the opportunity to enjoy their homes now for a couple of years, and I think they
Mhm.
probably um, it was a good move for them. Whether or
Mm.
not it was the perfect timing in terms of interest rates, I don't think that that's something that you should feel. Um, Sorry, can you see me all right?
Yeah, we
Yeah.
can see you. Yeah, you're
Okay,
fine.
okay.
You're fine.
Um, yeah, it's just impossible to time it perfectly.
Right.
And I think just over the course of my career, I've seen more people that have kind of shot themselves in the foot by time
Right.
by
Right.
trying to time everything absolutely
Right.
perfect.
Right. Right.
Um,
Right.
but
Right.
I think sooner is generally better than later. I think if
Yes.
there's if we're talking
Agreed.
about buying a house now versus 5 years from now, if we're talking about taking a 1% drop in rate through a refinance versus waiting
Mm-hmm.
until it's
Mm-hmm.
2%, I think it's better to be
Right. Right.
prepared for those opportunities sooner than later.
Mm.
Yeah.
Okay. 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 Thank you. Ty, do you have anything, or should I just
I think top of the I think I can just ask a closing question when you're done.
Okay,
Well,
okay. So let me just go. So complex loans, when you look at all the loans you've done, what are the complexities? Where I mean, have you had any kind of loans that have just kind of, you tear your, you pull your hair out? So have you
Yeah,
been through like any real complex loans? And, I mean, what's your experience with complex loans?
yeah. I mean, I think that anybody that's been in mortgage for any period of time, just
Mm,
particularly in this market, it just seems like there's always some complexity. Even if like,
hmm
even if a buyer has everything dialed in terms of their loan application,
mm,
it seems like there's some complexity with the property, or
mm,
there's some difficulties with the inspection
Right. Right.
Difficulties with the appraisal. There's so many, there's so many pieces that go into a transaction. So, yeah, I guess just like I don't know that any. Uh, I mean, maybe it's just maybe I remember the complex ones more because those are the ones that stick with you a little bit.
Right.
But
Right.
yeah, there's always things are never as or things are oftentimes not as simple as you plan.
True.
I think
True.
that um, that's one. I mean, I think that that's the benefit to make to working with somebody that you know and trust on the real estate side and the mortgage side.
Mm-hmm.
Um, but that they can solve those problems when they show up.
Right.
Um,
Right.
Complexity in terms of income, that I mean, certainly self-employed borrowers
Mm-hmm.
can present some complexity.
Mm-hmm.
People that people that are in a situation where um, they have maybe some variable income, or they are maybe making more now than they have previously been making. So um, they have they have more income than we can sort of show that they've been making historically. Those situations can be complex.
Mm-hmm.
Properties that are super unique, that are difficult to find comparable sales.
Yeah.
Those can be complex. Yeah, I don't know. I don't. I'm kind of rambling a little bit.
No, I think in your career, my career, there will be complexities.
Hmm.
You just have to try to be the hero, right? As much as you
Totally.
can to
Yeah.
work it out, right?
Yeah. Exactly.
Right. So whatever complexities come your way, you just have to be the one to hold your client's hand and say, don't worry, but let's just do what we need to do to get, it may take us longer,
Right.
maybe not 30 days, it may take us 60 days,
Yeah.
but we will get there. So, my job and your job is just to make the clients not feel like they can never get a home or they can never get financing. It
Totally.
might
Yeah.
just take longer.
So yeah, exactly. You and I are here to solve for those problems,
Right,
right?
right, right.
Yeah, and those are the those are the ones that are. I mean, in a lot of ways, that's the rewarding part of the job, right? Is
Exactly.
helping work through that
Rewarding.
stuff. I mean,
Mhm.
our job would be a lot less interesting if
Right.
everything
If
went as
everything was
planned.
straightforward.
Yeah, yeah.
It
So
never is.
yeah, and those are the times when you can kind of pat yourself on the back a little bit for solving a really
Right. But
difficult
just,
issue, or
yeah. Hmm.
people are super appreciative of
Right.
um, you helping them work through those things. And I think
Hmm.
that those situations always go. It just seems like having a good relationship between a lender and the realtor, whether it's some people that have worked together a lot or just people that are working together for the first time. Having some teamwork on that side is super important as well in terms of
Yeah.
working through the complexity of a situation.
Yeah. 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 I think you touched on something that trust. Trust is so important because if your client trusts you, the way you've built a relationship with them,
Mhm.
they wouldn't hesitate to listen to you, right?
Right,
So when they trust you, they listen to you and follow instructions because they trust you and they're less agitated, right?
right,
Because they trust you.
right. Because you've taken the time to treat
Right,
them
right,
as you should on the front.
right,
Yeah, and you're not pushing
right,
them
right, right,
into
right, right.
something
Yeah,
until they're ready to take that step.
yeah,
Mm-hmm.
yeah. Because there are some transactions that are easy. You'll be done in 30 days. There's some that, 45 days, 50 days, but you just have to be consistent.
Right.
You as the agent or broker, you have to be consistent. You
Totally.
can't just, turn them off or, you can't turn your back on them per se.
Yeah, you need to be consistent. You need to be available.
Right,
That's the
available.
nature of our job these problems don't just happen Monday through Friday at,
Mm-hmm.
8 a.m. to 5 p.m.
Mm-hmm.
Um, and so yeah, we need to be quick on our feet
Consistent and
and
available.
have a yeah, have have some solutions to help people get through this stuff. And
Right, right,
um,
right, right,
yep.
right, right. Have you had cases where you feel like you can't solve your client's problem and then you have to, maybe take a step back and say, hey, let me go here for you. Give me a day. I mean,
Yeah, I mean, there's certainly times where I need a moment
think
to
through.
think through it. I mean,
Mm-hmm, mm-hmm.
fortunately, I don't recall a situation um that where we just weren't able to find a solution
Right,
anyway.
right, right, right,
Um,
right.
I mean, I think that one thing that helps me out in terms of my experience is I tend to go into a situation knowing the potential landmines, so to speak. Um, but if not, there's a good chance that I've run across it at some point, or
Right.
somebody I've worked with in my office has run across it.
Mm-hmm.
And so um, I don't often not have a solution, but yeah, sometimes I need a moment to kind of work through that
To
with
work through
underwriting,
and
to
look at the
bounce ideas off
scenario.
colleagues,
Mm-hmm.
to
Yeah,
connect
right,
with
right, right, right.
both realtors, to just
Absolutely.
to work through that stuff. And I typically don't want to. Um, I try to have some solutions in place to bring to the client, right?
Mm-hmm, mm-hmm.
I don't want them to feel panic
Right.
um,
Panic,
when those
right,
when those
right,
situations come up. So
right,
yeah,
right.
ideally, I've got some things that I'm working on.
Nice.
Yeah.
Okay. Nice, nice. Okay, Taya. I mean, we're coming to the end. In fact, we are at the
Yeah.
end. So believe it or not, so I'll just leave it to Taya to round us up and ask the last question.
Yeah,
Okay.
so informative. Yeah, then Gen Z say you gave so much game. So yeah, so very informative session. So I appreciate that. I just want to ask in closing, based on your experience, years of experience, knowledge on, you know a lot about this. If you have someone 20, 21, 23, just starting in your career, mortgage financing, wants to learn or wants to get into it, what would be like one of the most important advice you give them in having a very successful career like yours and being outstanding in the field?
I think surrounding going to a place where you have the proper amount of support. It's it can be a challenging business. Just with regards to complexities and the unexpected. And I think you want to align yourself and surround yourself with people that um, have the experience to kind of help you get through some of those situations. Um, Meaning I've been fortunate in that everywhere that I've worked, I've been surrounded by a lot of really good people, and that's been the most important component of my success. Um, and so I think being judicious about where you work is um, super smart. Certainly, always treating people the right way. Not pushing people into situations that they're not comfortable with.
Right.
Building that trust. Doing doing everything that you can to create a long term relationship with that person is going to exponentially um,
Pay off
increase.
at the end.
You're going to build off your successes
Right.
exponentially, as you go. So not just looking at things purely transactionally,
Right.
not just trying to get get that one deal, or
Right. Right.
push a client towards something that may be easier or better for you, but maybe not the right thing for them. Doing it in such a way that you're truly looking after their best long-term interest. That's really the key to building your business, is just building it like on a stable foundation,
Yeah,
both
makes sense.
like with regards to where you work, and then just the way you're treating your clients.
Right. Right.
Amazing,
Right.
amazing. Thank you
Yeah.
Right.
so
Yeah,
much.
I like something he said real quick. Just as professionals, surround yourself with people you trust,
Mm-hmm.
right? Because if you don't surround yourself with people you trust, you can't grow,
Right.
right?
Right.
Because that's just it. If I trust you, I will be able to learn, or I'll be teachable, right?
Mm-hmm.
Because I trust you. And if I'm teachable, I can grow,
Right.
right?
Right.
So you just need to surround yourself with people you trust so you're
Mm-hmm.
teachable and you can grow, right?
Yeah.
Once you get to the point where you don't trust anyone, or you're feeling you're not happy, then it's time
Right.
to leave.
Yeah. This business is like too difficult
Yeah,
to do on an island, right? Like
right.
you need good people around you, and you need a good
True.
support network, just for like your own
Absolutely.
sanity, and then just to help you solve problems. Yeah.
Absolutely. Thank you,
Agree.
Tayo. Over to you.
Yeah, don't be overly transactional.
Right.
Expose yourself to good people,
Mm-hmm.
learn, and
Right.
build good relationships. At the end of the day, it
Yeah.
pays off exponentially. I like that. That is amazing advice. Thank you so much for your time. Thank you so much for all
Thank
these
you. Yeah.
advice and
Thank you
information. We really
so
appreciate,
much.
and hope to have you join us some other time to
Yeah,
share
we
Okay.
more
have a lot
knowledge.
of
Yeah.
questions we didn't touch, but so
Yeah,
Okay.
yeah,
maybe
yeah.
Awesome.
there'll
But
be round two
this
at
was
some point.
amazing. This was one
Yeah,
wonderful
I
time with
enjoyed
you.
it. Yeah,
Yes.
appreciate it.
Thank you so much. So now, Ryan, you can say you're a pro, right? You're
Yeah,
Yeah,
good.
absolutely.
Yes. Yeah, I'm a
There
podcast.
you go.
It wasn't
There
that
you go.
hard.
No, it wasn't too difficult.
It
Yeah.
Yeah,
wasn't that hard.
there
Well,
you go.
thank you. So thank
Thanks.
you so much, Ryan.
Thanks,
Take
guys.
care. Thank
Yeah.
you. Okay,
Thanks,
bye-bye.
Kyle. Thanks,
Thanks.
Kendra.
Okay, bye.